Welcome to our daily Bitcoin update, where we share our market perspectives, trading, and volatility strategies. We are a small team of investment professionals with decades of experience in traditional finance. Our careers span roles as traders, market makers, and portfolio managers for top-tier institutions. As proprietary traders of digital assets, we have developed a proprietary methodology combining qualitative and quantitative factors, merging a multitude of theoretical constructs from traditional finance and technical analysis. Our methodology translates how the pricing mechanism is influenced by market maker predatory tactics and trading algorithms with a focus on market structure, liquidity, volatility, and time-price-volume relationships. Please note, our content is not investment advice or is this an educational channel. It is intended for entertainment purposes only. Our content is clickbait-free with no affiliations to exchanges or paid sponsors. If you suffer from analysis paralysis and prefer short-format market perspectives and rationale for our trade setups, stay tuned and enjoy. Overnight, BTC consolidated in the Asian session near the 67.5k weekly high, and currently in the London session is attacking 68k as we head into the New York Open. The next key level to the upside where we expect a reaction are 69.6k, which puts BTC in extreme close proximity to largest liquidity depots between 70k-72k. The scenario of a liquidation-fueled wick to new 88ths before the weekend is not zero probability. On that same token, market conditions reflect rising complacency and consensus long positioning, make for susceptibility to market makers' insatiable predatory appetite. Thus, we view a stop hunt or squeeze of fresh longs to the downside more likely than a linear ascent to new 88ths. Levels to the downside where we expect a reaction are 67.2k and deeper at 65.5k-66k. In the scenario of a negative catalyst and subsequent impulsive price action. To the downside, the largest concentration of liquidity to the downside is 61.5k to function as either a magnet and reaction zone. Momentum to the upside continues to build this week with each successive trading session. BTC ETF net flows have been significantly positive for 3 consecutive sessions. The Crypto Greed and Fear Index is now firmly in greed territory. Futures open interest is approaching 88ths, reflecting increasing leverage, typical of bullish sentiment. Intraday trading ranges are expanding, implied volatility is rising, and call-put skew is widening. Our view is that recent price action is largely due to increasing optimism of the Trump trade, as polls and betting markets indicate a potential landslide victory in the making. Looking forward, tomorrow we have economic data out of the US and monetary policy meeting from the ECB, both of which having potential to provide a catalyst as a headwind or tailwind to price action. This due to the increasing data dependency of monetary policy following recent pivots of developed market central banks to policy loosening. This, along with recent stimulus measures in China, also look to create a backdrop of excess liquidity going into 2025. Liquidity, in our view, being one of the primary drivers of BTC's valuation. In terms of strategy, our base case scenario is continuation to the upside. Thus, we maintain our long bias. We moved from being tactically neutral to long in yesterday's session, following the predatory stop hunt, where market makers drove price from 65.5k to 68k to 64.5k as a wash to leverage, which cleaned the slate for continuation higher in our view. In volatility markets, we remain neutrally positioned with higher implied volatility overnight moving IV from cheap to fair. Inversion in the front end of the IV term structure is likely to normalize going into the weekend. Thus, we may look to go underweight Vega following tomorrow's aforementioned event risk. In expiries following the US election, we expect IV to remain supported and even rise as the November 8th vote approaches. As always, do your own research and analysis. Be safe, and good luck in trading.